Hello and welcome to another episode of FinTech Focus TV with me, Toby Babb. Today it is my absolute pleasure to welcome into the studio Leo from REGnosys. Leo, how are you?
Hi Toby.
Listen,
I'm very well, thanks.
Great to have you in. Thanks for coming over. Sounds like a really busy year for you. You've just been talking to me. We're coming up to Christmas as we're filming this at the moment, and a stellar year for yourself and the business. We'll come into all of that in a minute. Loads to unpack. But before we do, just give us a quick overview of yourself, your background, and the company.
Yeah, sure. So I'm Leo Labeis. I'm the CEO founder of the company. REGnosys is a regulatory technology or RegTech. We focus on capital markets and reporting obligations for capital markets firm. The company was founded by financial industry veterans, including myself.
Yeah.
So prior to founding the business in 2017, I was 13 years at Goldman Sachs in their global markets division.
Yeah.
But always
Quite a change for you.
So quite a change, and at the same time, kind of staying in the same industry. But I was at Goldman. I was always what they call strat there, but essentially in an engineering role.
Yeah.
So there was like a bit of a continuum, but effectively, my former employer and their peers are today, the clients and prospects that we are dealing with on a daily basis, and I also built the business to solve a problem that I was directly facing when I was inside.
It's so often the best case for that, isn't it? Where you see and you live that problem, and it sort of germinates in your head until you start a business. And so eight years ago, more or less, since you started the company, all gone pretty well so far by the sounds of it. Tell me a little bit about the formation. So you're sat there, you're enduring this problem over at Goldman's, you're seeing and getting frustrated by it. What's the process to then saying it's time to start?
Yeah. So the company's mission statement was, okay, we want to really change the way the industry approaches data and reporting to the regulators, reporting those data to the regulators. Yeah. And the mantra over time became, they have to be able to comply safer, cheaper, faster, and the corollary to that is together. So there is a big component around collaboration. So what does it mean? Effectively, like all financial firms are subject to the same reporting obligations. They all have to comply by the same deadline, and the data demands from the regulators just keep increasing. They are ever evolving. More and more stringent in terms of the data quality, and the data standards also keep evolving. So what that means for firms is, and when I was part of, still part of the financial industry, is you have to sift through hundreds, thousands of pages of text, and you have to convert that into code somehow, and be able to implement that in your reporting system to effectively perform these reporting processes automatically.
That's the optimum way of doing it.
So it's a lot of data that you have to source. It's a lot of code, often bespoke, that firms have to implement. They all go about implementing this in slightly different ways, all firms. And within each firm, different businesses will also tend to do it in a slightly different ways because you have different systems at the source, etc. So a lot of inefficiencies all around, lots of duplication of costs. So really the idea was, can we find a way for the industry, rather than each firm going about their separate way to try to implement that, really to find a mutualization proposal where they will be able to collaborate. And let's say, they have to report hundreds of attributes on all of the transactions that they do. If they could split the work of codifying those rules, and 10 of them take a tenth of the entire set of attributes that they have to report, then effectively you would put those resources that they have internally in common and find a much cheaper way of achieving a better result because it will be a result that not only is more effective, is more efficient, but it's also more effective in the sense that it becomes the industry's best practice. Because effectively the industry has come together and said this is the set of rules and the way in which we are reporting the data. So that's essentially the way we've approached that problem.
And so I mean, there's so much to unpack from what you just said there. Look, data seems to be at the core of every opportunity in the marketplace at the moment. And when you're seeing the ever increasing, and ever changing world of regulatory technology or regulation within this space, full stop, that's created a whole myriad of problems for people to deal with it. Obviously, the advancement of AI has helped significantly within that, but that only ever gets its real traction when the quality of the data that's going in allows you to do everything else that's in there as well. So this is a very current problem, one which I'm hearing about on a daily basis from people. Tell me about the adoption over the last 8 years. How's that gone about, and why is it sort of really gaining traction again at the moment?
Yes, so the way, and you're absolutely right about the data. It's increasingly more and more about the quality of the data, and in the problem that we solve, it's actually the regulator on the other side of that who, for their to get their supervisory powers, need to see good quality data. And they are themselves.
And it's surprisingly rare at the moment as well, isn't it? And the ease of getting good quality data to be able to display to a regulator is a very, very common problem.
Yes, and it's not for lack of trying. Like genuinely, the industry is really trying its best, but it's a hard problem between your complex technology estate that you start from and the ever increasing demand that the regulators put on that. Effectively, the two conspire with each other and make it very, very difficult. So the way we've approached that problem, and I'll talk a little bit about the just to draw the picture of adoption, is because of that industry collaboration approach. Our initial go-to-market was to work with the industry's standard-setting bodies or trade associations. So effectively, the financial industry has, depending on the type of financial market that you're looking at, had a lot of industry associations who are effectively the standard setters in their part of the business. And one of the, in fact, the first one that we started to work with was ISDA, the International Swaps and Derivatives Association. And effectively, we've been their technology partners for 7 years now. Almost 8. But effectively, in developing that commonality on behalf of the industry, effectively, it's common code that is being developed under the governance of the industry's trade association, which is backed by their membership, which in the particular market that we operate in tends to be like a lot of large financial institutions, a lot of banks, but obviously also asset managers.
And you cross both areas of buying and sell side.
Because they are all subject to those reporting obligations, whether they are the sell side or buy side, they are subject to those reporting obligations. So in effect, the go-to-market was first working with the industry's trade association to develop that in common. And the second part, which is ongoing at the moment, I'll talk a little bit about the timeline. And then the second part is nowadays that common good that the industry has put its weight behind and effectively kind of put its stamp of approval. Then it's about driving adoption by individual firms. And again, that's where the software platform that we've developed effectively facilitates that adoption by individual financial firm. I want to use that great thing off the shelves. How do I do that? And we come here and help with an implementation.
And that's got to be working well now, as opposed to let's say 15-20 years ago. 15-20 years ago, to me, technology was sort of very much an insular arms race. So everyone was not looking to share their toys. They were there and saying, well, we've got to have the best people to be able to do that. Let's do something in-house here and be very secretive about what we're doing around that to solve problems against, or around the regulators or whatever it may be. Right now, we've got a much more collaborative financial sector, where I think people are learning, working together, sharing various bits, sharing standards, and this sort of thing here, where you can provide a universal problem, particularly when you've got something there which isn't just about legacy enterprise technology anymore, and you can be bringing in lots of different people together to do that. That's got to be the perfect storm for you, right?
Yeah,
how it works.
And you're absolutely right.
Customers as well.
No, you're absolutely right. I think when I started the company, I think this idea of collaboration and in fact I'll say the word, like a lot of where we operate in is within the open source ecosystem for the obvious reasons that I mentioned. But back when we started, that was almost like a non-starter. So we really had to crack that market and get firms comfortable. Obviously, we did not do that just on our own. There were, I think, powerful forces at play that made something that looked very, almost impossible 8 or 10 years ago, much more palatable today. And I think that mega trend of why the industry has to collaborate is just cost pressure. It's just cost pressure, and it's just this idea of the old ways of doing it, where you're hugging the tree and keeping everything for yourself, especially when you're talking about regulatory compliance and reporting, where there is no competitive advantage of doing it better than your neighbor, defined better. In fact, there is a competitive advantage in being part of the group that adopts the industry's best practice, because it provides you with a defensible position to the regulator. So that has become, that cost pressure means that new ways of doing things and being able to share more of your technology assets becomes a no-brainer. So conceptually it becomes a no-brainer. Now comes the hard part, which is how do you execute it, right? And that's where you're still we are effectively running an organization which does large enterprise sales, and how you drive that is obviously a function of how big the institutions that we are working with. But at least the comparison compared to when we started, you don't have to convince people that it's a good idea and it's the right thing to do. It's just you have to get them comfortable on the implementation path.
Well, I think it sort of gets to one of those sort of stages with a business, doesn't it? Especially a business like yours, where you have the more and more people who get on board with it, the more and more it becomes inevitable that other companies then move through, and that kind of what we were talking about before we came on air. I had someone who's been on this show a few times, and I remember very vividly an episode we were recording where he talked about his product effectively becoming inevitable in the space. So if you had this specific problem within your area, inevitably you'd use his company to be able to deal with it. And it gets to that sort of interesting sort of movement to it, especially when you're talking about all the things you mentioned there, efficiency, cost. These are things which are important to it. And I think that, the RegTech world is a very interesting world to me, because we've seen probably in a space that doesn't necessarily scream innovation, regulation, does it? But you've seen that probably the fastest amount of innovation, I think, within technology and regulatory technology over the last 5-10 years or so. There's some excellent companies that come in and solve some real problems to it. Regulation isn't a problem that's going away anytime soon. We've seen all sorts of different changes out in America. Speaking to various different people about T+1, some of the shows which we've done recently over there. With what's coming over to Europe and everything, it's an ever evolving bit, be it MiFIDs or whatever else you want to come through. We always know there's going to be something that comes next, and there might be sort of little quieter times in the ocean and bigger storms that sort of come through. But it's one of those areas that I think is fascinating, and in that it's obviously grown a hive of highly innovative companies that are solving problems within that. And so when companies are faced with this sort of plethora of different companies within the RegTech space, talk to me about how your value proposition differentiates you and why people are signing up and using the business.
Yeah, so and you're absolutely right on the innovation. In fact, like great innovation, great discovery, you need two things, right? You need a little bit of that sparkle of different way of doing things, and you need a constraints, because engineering loves nothing more than a constraint that you have to work towards. So and regulation is almost offering something perfect from that standpoint.
Well, they love the best technologists to me love solving complex problems.
Exactly.
You've got to have that sort of thing for people to see.
So the only constant in regulation is change, as you pointed out, and so the way we've more recently approached, that positioning as being inevitable in that market is one after the other across the G20. All the big regulatory agencies have changed their reporting regime for a specific aspect of reporting on capital markets. Mm-hmm. So it started in 2022 with the CFTC, which is one of the regulators in the US. And then it has quickly spread to the G20. And this year, in fact, we've had 6 jurisdictions in the G20, including the US, who had gone through another update, that have changed their reporting regimes for a type of obligation called trade and transaction reporting. But the point is, as those change, then no matter what, the firms, the reporting firms have to somehow update their systems, which means they have what is called change the bank budget for running those programs. And this is what has been a game changer for the past 2 years for us, which is the ability to really tap into those change the bank's budget and effectively come with what is ultimately a very elegant solution to that problem, which is, I can use a solution that has been backed by the industry leaders, which means it's the best practice, which means not only does it allow me to be in compliance with reporting to the CFTC and ESMA and so on, but it's actually going to make me better in terms of my own data management internally. So it's kind of the confluence of having a catalyst, like you talked about T+1, but this is another catalyst which comes from the regulator, a catalyst, and then the willingness to do it better and to think strategically about their data management. Once we have those 2 ingredients, then we know that we have there is an adoption path for that particular client. And this is the thing that has been happening more and more.
So exciting stuff with it all. And I wanted to, you mentioned there about the sort of formation of the company and the traction you've got recently. I know the company's gone through an evolution over those 8 years, as everyone does, from the start-up there, where it's a bunch of people who work together. I assume you talked about a sort of highly experienced founding team that's sort of come together. I know that journey's involved a sort of change in I guess a certain demographics and embracing diversity of thought, inclusion in your business. Talk to us about where that came from and how you've gone about that.
So it started, I would say, there are 2, I would say, founding episodes on that journey to diversity and inclusion at REGnosys. There is a very, very early episode where we took part in an accelerator program, the FinTech Innovation Lab here in London. And as part of this program, you get some master classes, some mentoring sessions, etc. And you cover all topics, from company formation, capital structure, how to raise money, etc. And one of the topics covered was recruiting and diversity and inclusion. And all of the companies, so that was in 2018, so very early on. And all of the companies in the program, 20 of us, were pretty much in the same stages, quite early on. So basically, I would say the mood in the room was, it's great, we would love that, but at the moment we are so focused on sourcing the best talent, and that at that point in time, and it's great if it's diverse, but at this point it's a luxury. Can we really afford to, let's say, not make a hire or delay a hire, just for the sake of diversity metrics? And I still remember vividly the response from the mentor who was delivering that. He said, "Well, I'm sorry, but you're dead wrong." And you're dead wrong because if you wait until you are 20 in your company to worry about that, then the market is going to look at you and effectively the people who are not in your company, they won't want to join you.
Yeah.
And I remember it kind of struck me at that point. And obviously at that point, we were one of, let's say, the offenders, and in particular not having gender diversity. The second episode was a bit later in the company's journey, where a few years ago, we just redid our website, and at that point we thought, well, it would be nice to have our values out there. So first of all, what are our values? And it was very interesting because they just came just like this.
Okay.
And I think probably a function of the fact that
from where, interestingly. So is it just
we never wrote anything down.
Yeah.
And then we thought, well, let's write something down.
Yeah.
So then you ask yourself, what are they?
Yeah.
And because the company had a few years under its belt, then they came just like this because they had formed organically.
Yeah.
And literally, I think, so we have 4 values, which is do what's right, everyone's a leader, less is more, and right to the right job.
Okay.
And those 4 slogans, if you want, those are things that we kept saying in meetings, in conversation. Whenever you're like, okay, let's go back to first principle and what's the right answer there. And we always kept those are not things that we invented. Those were things that were talked about.
Yeah.
So when it came to writing them down, they were already there.
Done it, yeah.
So it was just about putting some wording around it, and that was really interesting. And then we thought, okay, well, if we really want to abide by those principles, then we have to do something about diversity in the company, and specifically gender diversity. I was at the time happy about other sorts of diversity in the company, in particular ethnic diversity, but gender was really a problem, and we articulated that drive with recruiters. We changed ways by which we were also putting job offers out there. We kind of did a bit of a bottom-up change, and this has really massively helped us. And probably not surprisingly, we hire our first woman developer. So that was back in 2022, and then it became easier and easier. And I remember quite well. I think it was last year. Well, one of the person we brought in, she was actually on the board. She was sitting on the board of a non-profit who was focusing on gender diversity in the technology industry. And she said, well, I really appreciated the fact that in the interviews, we carried out the interviews with pairs, and the pairs. It was not by design, but they happened to be, there was often, one guy and one girl. And so that was, without thinking about it, like the fact that she said it to us, I was like, okay, it's great. We've done something good. But look, it's not like, okay, we've achieved now, so let's move on and do something else. I think it's something that we have to constantly, come back to. And make sure that we keep articulating that in our recruiting drive.
Well, it's incredibly important, isn't it? And there's some very, very well put together reports and views and statistics about the benefits of where you go with it. And I think people have always been very keen to say, look, it's we'd love to do. Like you said, it's a very common trait to hear. It's always been done like this, or it's not easy to do that, or we're focused on what we're doing. We just need the right people, etc., etc. But the benefits of actually spending that extra time on it all, and seeing there are some, there's a far bigger pool of talent if you look for it in the right sort of way. That's something there which can have a transformational effect in the business, which it seems to be having with where you guys are at right now.
Yeah, I mean, for us it was a
values-led company, right? Yeah,
exactly. I mean, for us it was we did it because we thought it's actually good for business. Right. Obviously, we want to do good, but this was a conscious business decision that to be better we need to have that. And in fact, a lot of our clients who are in financial institutions, they also have big DEI drives, A lot of our clients are women, and they a lot of them are sitting or are active members in affinity groups internally within those banks where they are promoting the career and advancement of women. So it is important to them.
Yeah.
And the fact that we try and do our best to adhere to this philosophy as well is also a good thing for business.
Yeah. No, absolutely. And so let's look at business moving further forward. It is, as we've highlighted a couple of times, it's a pretty transformational time in RegTech at the moment. We're seeing lots of different things happen at pace, as has probably been the trend for about since 2008. In honesty, at the same sort of stage. But we're seeing a lot of it feels like a lot of change, a lot of opportunity at the moment. What's the pulse like in the marketplace? I know, when you started up the business, you were looking at the what's and where's. You've been very passionate about London being a prime place to build a RegTech business. Give us your views on that. Give us your views on why London, and then a little bit of what it looks like in 2025 in the market.
Yeah, no, absolutely. So look, there are reports, about the size of the RegTech market, and it's hard to exactly pin down the numbers. I think what's currently reporting at the moment, it's about somewhere between 15 and 20 billion globally, and it's growing.
Yeah.
That's the most important trait, which is I think it's growing at a double-digit clip every year, which is kind of like a healthy place to start from.
Yeah.
Now within that, the specifics of London, I think we have to talk about Brexit.
Yeah.
Because so if you looked at how things were pre-Brexit, London had everything.
Yeah.
Right? As a financial ecosystem, it had the firms, the know-how, the infrastructure, the people, everything was just there. And it's true that Brexit put was a bit of a shock in there. But it's in the rearview mirror now.
Yeah.
And with a few years down the road, what you see is that London has not really been knocked off its pedestal in terms of being the premier financial place, which means the ecosystem still very much stays there.
Yeah.
So you have some obstacles, roadblocks that maybe were not there before in terms of your ability to attract talent from everywhere, specifically in Europe.
Yeah.
But it's not like it's a complete blockage. Yeah, okay. There are a bit more obstacles on the way.
Yeah.
But you can still do it.
I think that's important to say as well, isn't it? I think there's a big headline about that whole piece, but there is the ability to take skilled talent still exists for everyone, and I think London has always been a sort of magnet for that talent to want to come and work and be around that sort of thing. It's, when we talked before about interesting problems, as a technologist, you want to be working with the most interesting problems in the world in something there, a space where we can see lots of things around other areas, digital, especially with the rise of digital, where there becomes a lot of interesting problems to deal with, but finance still has some of those most complex problems which have the biggest impact into it, which I think is always going to be there. And I absolutely agree with you. I think London's always been a very good magnet for that.
Yeah, and it has, I think what is extraordinary over the past few years is how much it has remained a magnet in spite of that big shock it actually had to go through, so, which talks about the resilience of it as a place and the people and so on. So
absolutely.
So what has changed, I guess, is not much in the sense that it remains a premier financial place, and it has become stronger as a place to do tech as well. And it's clearly a premier fintech place as well, not for entirely exogenous reasons. It's also because there was a financial industry in the first place there. So you combine those two, and it's not surprising that it's a great place to build a RegTech business. It means there are a lot of RegTechs who are serving also the challenger banks and the new kids on the block in the FinTech. And also you have quite a forward-looking regulator or set of regulators, because there are several of them for the financial industry, but forward-looking as in not being shy to really to take a favorable view of innovation, trying to encourage it, and also interestingly, and probably compared to some other regulators in other similar jurisdictions, having an explicit mandate around competition, and everything that encourages competition is part of the mandate. And what better things to encourage competition than to reduce the barrier to entry to provide financial services. And one of the ways by which you can reduce the barrier to entries is by not being less compliant, but effectively being better compliant. But if you could make it less costly and more effective for firms to comply, then you would have created the conditions for a more competitive market where people offer financial services. So I think that's part of the ethos, at least, of the regulator here, which means there is quite a positive dialogue that's taking place with the regulatory technology community as well as with the regulators.
I think there's certain things that this country's got right from a financial institution level, and the encouragement of, particularly over the last 10 years or so, the encouragement for companies to set up and thrive within this thing. It's been it's been a strong space, and obviously there's been a little bit more challenge over the last couple of years, particularly with funding and various other levels. But I think the government recognises there's a huge opportunity to work within this space, and it's always been well backed to move it through, whichever government's been in charge at that sort of time. So let's wrap up with you guys. Let's look at what 2025 looks like. As I said at the start before we came on air, it's been a really busy couple of months for you. You're ready for Christmas. You're ready for the break. 2025 and January in particular seems like it's going to be off the hook as well for you as well. So let's look forward. What can we be excited about the company and what the year ahead has in store for you?
So as I said, so this year there are 6 jurisdictions that had regulatory change, and this only sets the bar for what's going to come next. So next year we have 3 more that are going to get updates from places like Hong Kong and Canada. So it really spans all the continents, and some updates from the US. So it's going to keep changing, and as those are dates that are firmly in the calendar, as in, everybody has to comply with the new rules by that date. At the same time, the regulatory machine keeps grinding, and there are talks of, consulting for the revision for the next regime after that. We talked about MiFID just before the podcast. That's going to come on the cards again. So those wheels, will keep grinding. So unfortunately, it goes back to the only constant is change. Is change. There's going to be more and more of those. The good news is, our clients today are all saying, well, if we are covering those 6 or 7 regimes, we really want this to cover everything. So I think what this means is there is appetite to really keep increasing the coverage to make sure that elegant collaborative solution is effectively provides the most coverage for firms who are subject to it. So that's going to be the story, at least for the next 2 years.
Well, that's the basis of your thing, isn't it? It's stuff there that's got individual and domestic sort of issues. There's regulation that's purely applies to the US for example, as opposed to Europe, as opposed to Asia, and all these various bits and pieces in between. And you've got companies that are covering all of those areas, needing different areas within that. And something there where I mean, I shudder to think of the size and scale of what you where you sit with the whole world effectively, various both buy and sell side. It's a massive addressable market, isn't it? So exciting times for you. It sounds like you're going to be busy.
Yeah.
Leo, for people watching it and want to get in touch with you, what's the best way for them to reach out? How do they get in touch to find out more?
Depending on whether you want to get in touch with us for sales conversation or for careers, the best way is to go to our website. We have career-wise, we have a number of job offers that are out there, and we're going to keep posting them. And then, for sales conversation, again, go to our website, have a check there, and what we like to do is get quite quickly into a dialogue and show you the art of the possible. What an implementation would look like for your firm.
Sounds like a very good idea. And it sounds like exciting times for change. And when you talk about the values and the things that you're doing and the challenges of what you're going, it sounds like a great place to work and get involved in as well.
And we also we put some, because of that industry position, we put a lot of thought leadership pieces out there at the crossroad of regulation, standardization, data management, etc. Which we publish often on social. So if you want a primer on all these topics, this is also a good place to start.
You can find it all out. Well, listen, Leo, it's been great having you in. Thanks for making the trip over and coming to see us today. And thank you all for watching. We'll see you soon on the next episode of FinTech Focus TV. Thanks a lot.